Welcome back again, guys. Today I'll be explaining what trend is and how to identify trend in forex trading. So let's dive into it right away. So we start by defining what trend is. Okay, so now a trend is a direction in which the market is moving. Note, as we continue our journey in forex trading, it is essential to understand one of the fundamental concepts, which is identifying trends. Trends are the backbone of successful trading, and being able to map them accurately can significantly improve your trading decision. So all I'm just trying to say here is trend is like the backbone of forex trading. You must understand the movement of the market before you can start implementing your analysis and to make right decision. So there are three different type of trend we have in forex trading. There are three primary types of trend in forex trading. The first one is uptrend, the second one is downtrend, the third one is sideways trend, which I also call a ranging or consolidation in forex trading. So now let's dive into this. Let's explain this trend graphically. Give me a second. Let's pick our pencil. Okay. All right. So now let's identify the first one, which is the uptrend. Okay, let's identify the uptrend, because if you go down to the notes, you will see that our first primary type of trend, is uptrend. So now let's dive into it. Let's identify an uptrend. Okay, let's identify an uptrend. So now whenever you open your MT4, MT5 for your trading view or your trading platform, if you zoom out the markets very well, the charts very well, you will realize that most of the times the market is making this kind of a movement. Okay, so this kind of a movement signifies uptrend. This is what an uptrend looks like. Okay, this is just the basic view of an uptrend. Why is it called an uptrend? Because the direction of the market is moving upward and is touching and returning at some point, creating higher highs and higher lows. Okay, so if you look at this market very well, you realize that the market pulled up to this point, came down to this point, it stopped here, then it broke this level, pulled up again, came back and tested the same level here. It pulled up, came back, tested the same level here. Okay, then pulled up again, breaking this level. It came back and tested this level here, so it's expected to pull up, break this level and come back and test it. This is how you identify an uptrend. So now let's move into let's identify a downtrend. Let's see how a downtrend looks like. It's the opposite of an uptrend. So for a downtrend, this is how it looks. You will see the market doing something like this is the opposite of the uptrend. So now in this part, now this downtrend, you will notice that the market pulled up to some point, came down at some point, which is here. Are you seeing it? The market came down to this point, meaning it broke this structure here. This up movement, it broke it down and it came down to this point. It came back and tested this structure here. It pulled up, tested it, then broke this other structure. When it keeps breaking structure, moving downward, that is how you identify a downtrend. Okay, this is what a downtrend looks like in the market. So now let's talk about the consolidation or ranging zone. Okay, whenever you see the market doing something like this, this is a consolidation zone. Why is it called a consolidation zone? Because it has been accepting and rejecting at a particular level. It has been accepting and rejecting at a particular level. And whenever you see the market like this, just know that the market is consolidating. I'm trying my best not to make this video very lengthy. So in this section, I've been able to explain what's an uptrend, downtrend, and the consolidation zone looks like. Okay, so now let's explain. Let's go back to our notes rather. So you see that in the primary excuse me, in the primary trends, they have just three primary trends, which include the uptrend, downtrend, and the sideways trend, which is also called a ranging or a consolidation zone. And I've explained them right here, that this is the uptrend, this is the downtrend, this is the consolidation zone. So now let's dive into it. Let's explain. An uptrend is a series of higher highs and higher lows, indicating a bullish market. What do they mean? Let's draw and let me show you what they mean. But before that, let's read it again so you know what we're talking about here. It's an uptrend. An uptrend is a series of higher highs and higher lows. Is a series of higher highs and higher lows. So now let's see what a higher high and higher low looks like. Okay, when they say higher high for an uptrend, you see the market, this is a higher high, higher low. When it breaks out of this structure here, that's a break of structure. It has created another higher high. It's giving us a higher low, breaks out of it again, higher high, gives us a higher low. Let me go back to this. Let me explain this again, all over again. Let me explain this. Remember, they said an uptrend is a series of higher highs and higher lows, higher highs and higher lows. Okay, now let's identify it again. Higher high, higher low, higher high, higher low, higher high, higher low, higher low, higher high, higher low, higher high, higher low. Meaning that the lower part is called the higher low, the highest part is called the higher high, higher high, higher high. Okay, so whenever you see the market breaking structures, creating new higher highs, that is called an uptrend, and it only identifies that the bullish are in the market. The people trying to push the market higher are in the market. But before then, there's something I want to explain to you. There's something I would like to explain to you. Let's go to English. There's something I would like to explain to you. Okay. Let's choose our writing to very well. Alright, let's go. So this is it now. I want you to have this understanding about bullish and bearish. Okay, bullish identifies the bullish identifies sorry that was my mistake. Okay, that is better. The bullish identify the uptrend, the bearish identifies the downtrend. Okay, so whenever you hear or you see a forex trader make reference to either a bullish, it means the market is moving higher. Okay, but when they say bearish, what comes to your head is the market is moving downwards. When the market is moving upwards, it's called a bullish movement. When the market is moving downward, it's called a bearish movement. Okay, so as a forex trader, you must be familiar with all these words. Okay, so now let's move into why we are here. How to identify higher lows and higher highs. Okay, for a bullish movement. For a bullish movement. For a bullish market. How to identify a bullish market, which is an uptrend, you must see higher highs and higher lows being created. Okay, so what do I mean? Let's say the market opens here, pull up and came down. What has happened here? It has created a higher high at this point and give us a higher low. So what do you expect the market to do? The market has to break this higher high, and whenever the market breaks a level, we call it break of structure. That is BOS, break of structure. So what we mean, when the market pull up, breaking this structure and coming back to retest this break of structure, this particular zone here where it just broke, the market has to come back to test it. Meaning that the market has created a new higher high and now it has given us a new higher low. So what do you expect again? We expect the market, if the market is still pulling up, you expect it to still break this high. Yeah, meaning this part turns to another BOS, that's the break of structure. So the market pulls up, breaks it, and come down and retest the particular zone. Now, what you need to understand is the market must always come back to retest a level that has been broken. It is a law in Forex. So whenever the market breaks out of a particular zone, you expect the market to come back and fill it up to retest this zone. Okay? So now, coming back to this zone, that is where our higher low is being formed. So this is how you identify an uptrend. It is also called a bullish movement or market or whatsoever. Okay, so now let's go down to the bearish. Okay, how do we identify a bearish higher high and higher low? Okay, a bearish lower high and lower low. So for a bearish, for a bullish, it's called higher high and higher low. But for a bullish, it is called higher low and lower low. Okay, higher low and lower low. So now, how do we identify it? A bullish, a bearish. Sorry, excuse me. Okay, a bearish. A bearish movement, it signifies a downtrend, meaning that the market is moving downward. Okay, so now how do we identify this? All right, that is where you see the market moves down, pull up, moves down, pull up, moves down, pull up, moves down. What do you notice here? At this beginning point here is our higher low. Our higher low, the market pulled up and broke this what do they call it? Oh, sorry, I think I made a mistake. Sorry guys, sorry. Okay, let's go again. So I don't confuse you. Okay, a bearish signifies a downtrend, like I said earlier. It's okay, we are here. Now, how do I identify a bearish movement? Now, you will notice that the market keeps creating new lows. Okay, the market keep creating new lows. So now, this is it. How do we identify this? You will see that here is a higher low. It came down, it broke this level, it came down to this point and created a lower low. It pulled up and tested this level it just broke, giving us another higher low, like the opposite of the bullish one rather. It came back, broke this level, meaning it has given us a lower low. It came back to this level it just broke, which is our higher low, and broke this another level, which is our lower low. So this is how you identify these things. For a bearish movement, you have higher low, lower low. For a bullish movement, you have higher high, higher low. So try to understand this so it doesn't become complex for you. So this is how you identify this zone. But for a consolidation zone or area, just know that the market will keep moving like this, consolidating. When it's moving in a particular range, you can call it a consolidating zone. So now, the next section we are going to be talking about. We will be talking about how. Wait, let me clear this thing off. How to how to map out these zones very well. How to map out these zones very well without making mistakes. How to map out these zones very well without making mistakes. Or better still, how to map out these zones professionally. Okay, how do we map out our higher highs, higher lows, lower high, lower low? How do we mark them out in our chart? So how do we identify them professionally? So now let's dive into it quickly. The topic is how to map out the trend zones professional. I think I have to stop there.